we're talking about volatility as well, I know you this year had written to investors basically saying that it doesn't really matter who would win the election when it comes down to the markets more directly. But I am still really curious about how you're thinking about the election, less than 2 weeks away, uncertainty around how long it will take to know what the votes really come out to be at the end of the day. How do you think about that uncertainty and investing around it?
Yeah, look, I don't know how to handicap it. The only real projection I'm going to make about the election is it's going to be held on November 5th. And beyond that, it's really hard to know. The election seems to be very close. And, I don't know whether we'll have a winner anytime soon. I don't know whether either candidate is preparing to concede if it's a close election. So we'll just have to kind of see how that plays. I'm taking a relatively conservative posture into the election. I view this as a potentially uncertain event.
Is there anything that could take off after the election? We hear over and over that investors are taking a risk-off tone before that time. So what starts to take off after?
Well, I think if you have a clear winner and it's the country, it's clear what direction the country is going to go. I'm confident that investors will chase whatever is perceived to be a beneficiary of whichever candidate that happens to be.
I want to get your macro view on this as well, because a lot of people are worried about the direction of inflation. You saw the 10-year really trail higher in recent days. Some people think it's a Trump trade. What do you think about the direction of travel for bonds, the macro markets more largely on the heels of this election?
Yeah, I think that we've moved from a secular deflation for many, many years into secular inflation. And we've had a reduction in inflation from the peak from a couple of years ago. But I think a lot of that has kind of run its course. And so there's a decent chance we should have inflation reaccelerate, probably as soon as the next inflation reading. As far as I can tell, there's still rents that have to flow through. Commodity prices are getting stronger. And I think there's some other indications, labor prices still going up. You see what's going on, for example, with the Boeing strike. These wage increases are relatively substantial still. So I actually think that the deflationary period is kind of, the disinflationary period is kind of coming to an end. And I think that you can see it in the inflation derivatives market and you can see it in the bond market. Additionally, regular growth is pretty good. We're running about 3%. So if we're at that 3% growth and we've got, at least 2.5 and maybe rising inflation from there, that's nominal GDP of 5.5 plus. It's hard to see why Treasury bonds at 4% or a little bit better than that are mispriced, or why rates should come down from that.